All right. Welcome to the update webinar of HypeRocket. So, like I told last week, we started with the project, and it's still, in my opinion, in a pre-launch phase. Yeah, because there will be a lot of new things that will come in the next 2 weeks. So I will explain you later. I will give you some leaks later. But at the beginning, let me share my screen to update you about. Hoppla. Here's the Zoom. Yeah, let me update about some results. So first of all, thank you to all of you. We had a really, really amazing start with the community because, we were over 4,000 users joined from over 4,000 from over 20 countries, and we have already over uh, over 2,000 deposits. That's really amazing. So again, thank you, and I believe I believe we will be one of the biggest projects by the end of this year. So everyone who is positioning now will benefit later from it. And already I received so many questions about the Streamline bonus. So already the first pool is already full because for the first 1,000 people, the first pool is already full. And now where there the second pool, third pool, and the fourth pool is left. So because right now already 2,000 depositors we have, there are still 3,000 spots left for the second pool. And the first payout, there was so many questions. So the first payout for the pool bonus will be next Monday on the 11th May. That was posted in the Telegram channel. So, and how it will work, because this week we will do an update here, which means that not only that your first deposit counts, but also all deposits or reinvests that you will do afterwards will also count into your position, so that your share of the pools will become bigger, and then you will participate much more from the 1% global turnover. Okay, so no matter if you do it now or do it later, with the update, everything will count. So the deposits now and the reinvests or deposits later all will count. And I think this is an amazing update. So you can. We are still very, very early. Yeah, very early. So you can spot your safe so your place now and take advantage of it. Okay. And also good news today. From today, we had an amazing performance by Sven, his team, with plus 0.5%. Also wanted to share that with you. And so these are basically the first updates what I want to share with you. And at the end of the webinar, I will show you the next things that we wanna update. And now I would like to start already with the presentation for all the new people who are here inside. And later I will pass to Sven, who will explain also the trading results until now, and explain again how what he's doing, how his team generating the money. And because we have a lot of new people here that are listening first time. Okay. So first of all, a short introduction to myself. My name is Sergey Heck. I'm in the blockchain space and network marketing space since 2015. Originally, I am a diploma engineer in mechatronics and worked in the past for Mercedes-Benz. But later, I become self-employed and become an online marketing and network marketing expert and built all communities with over 500,000 partners. And later, I founded blockchainhero.com and coincareer.de in Switzerland, which is like a German-speaking education channel. And later, 2019, I founded ChainClass, one of the largest crypto education companies. And since 2023, I am a marketing advisor at Bitopex and as well here at HypeRocket. And many people always asking me, how it came to HypeRocket. So basically, first I met Sven, who is the CEO of HypeRocket. I met him in 2018 in Davos, and and from then on, we afterwards we met each other very often in Switzerland, talked about business, and so on. And later in 2023, I became the marketing advisor at BitTopics, and yeah, the rest is I would say history. And later Sven will anyway introduce himself, therefore I will not go in detail here. And yeah, so then 2023, BitTopics started. So Sven founded it, and BitTopics, it's a crypto options exchange where you can trade options, but also you have copy trading strategies like Bitcoin and Ethereum. And here already the strategies are running over 2 years, which Sven and his team are managing, right? So with a performance of over 122 plus percent, with an AUM of over $7 million. Okay, and yeah, and now Sven started with the race of AI. Sven started to trade also the Hyperliquid token, very successful. And yeah, the Hyperliquid token, I will show you, is the number 10 token on CoinMarketCap with a market cap of $11.1 billion. And why Hyperliquid? Because Hyperliquid is the biggest DEX, is one of the most successful projects in crypto space right now. It's the biggest DEX. If you go here on exchanges, you go on, you see the centralized exchanges is Binance number one, but DEX is Hyperliquid number one with a trading volume only in the last 24 hours of around $10 billion. It's really crazy, yeah. And therefore Hyperliquid is generating fees, yeah. And if you check here in the last 24 hours, Hyperliquid is the most successful project in generating fees before Tron, before Ethereum, and Solana, and here HX. So, and you see, only in the last 24 hours, they generated $2 million in fees. And the tokenomics of Hype are that 97% of these fees are buying back the Hype token and burning them. Okay. And therefore, you have a much better chart performance from the Hype token compared to Bitcoin, Ethereum, and other tokens. And therefore, and this is why they started to trade the Hype token. Okay. And the question was, should they start here, first strategy or a new project? And we talked with a lot of people, and we decided to do a new project, and the decision came to a new project, and this is how HypeRocket got born. Yeah, and HypeRocket is a project where we have two parts. We have one part is the investment part, and the second part is the affiliate part. So the investment part is you can invest with USDT or USDC, and then Sven, his team is trading the Hype token, and then you will get up to 0.5% daily until you reach 250% ROI. Okay, so really amazing. And then we have the affiliate part with 4 income streams: Unilevel, Matching, Infinity, and Streamline bonus. Okay, and this will I explain shortly in detail. So first we have the Unilevel bonus, where you get up to 11% on the deposits over 15 levels. So it starts with 4%, 2%, and so on until the 15th level. And then we have the matching bonus. It's the bonus on the daily profits. So where you also have 15 levels. And here it's amazing because the profits are generated daily. You also get daily income from your downline. It's really great. And then we have the third income stream. It's the infinity bonus to infinite debt. It's the most powerful bonus because we have here 10 ranks from starter to ambassador. And here you can get additionally up to 50% on the whole downline commissions. And it works also like a differential bonus. So for example, if I'm on the rank crown and my partner is on rank diamond, then I will get the difference. It's 40 minus 25, it's 15% on the whole downline commissions. And then we have the Streamline bonus, which I already mentioned, that it's like an early adopter reward. So the first 20,000 depositors are participating from a 1% global turnover pool. And here we have two factors. It's the timing. So the earlier you join, the better. And also, of course, the deposit size. So the more you deposit, the better. So yeah, and basically that's it. So this is how it works. I also want to show you quickly how you can easy start here. You just click here on deposit, and then you can start here already with minimum $50. You can invest with USDT on Ethereum, Tron, BNB, or Solana blockchain. Okay. And that's basically it. And now I will pass to Sven. It's the most important part. The most important part that you see how everything works. And after Sven his part, I will shortly give you some leaks about the next update that will be on the platform. Okay, Sven, thank you. The stage is yours.
Thank you very much. Thank you very much. Good. Let me start sharing my screen. So you let people in, right? When somebody.
Yeah, sure, sure, sure. Yeah, I see your
Okay.
screen. Perfect.
Okay, let's start introduction of myself. So I started my career working for Ernst Young. So Ernst Young is one of the biggest or the biggest consulting and audit company in the world. And I was especially working in finance. So was doing many projects with insurances, banks, hedge funds, and so on, specialized on data in asset management, derivatives, Basel, solvency, such kind of things. And back in the time, I was leading a team which was uh, educating about new technologies and bringing that to the clients. So that the banks they learn, okay, some new technology comes out like a Bitcoin or AI and so on. Then they need some strategists who help them to understand the technology, right? The management and how they can apply that. And and based on that, we got many clients in the blockchain and crypto area. And one of the clients was Swisscom. So Swisscom is one of the biggest companies in Switzerland and is of course doing the telecom services, the internet, but also has like a 3,000 people banking department, which is only doing like services for banks. And together with Swisscom Banking, we started a new company, Swisscom Blockchain. I was also shareholder of this company. It was first time when Swisscom gave an external team shares in one of their subsidiaries. And that's very so that just show how important it was for them because it's like half state-owned company, so they cannot just play around like other companies. And I was building up here like a consulting and development team for the topic blockchain. So blockchain, the technology behind Bitcoin, and we again served like banks. And after 2 years around, I sold my part in the company and worked as an entrepreneur, so self-employed. We started different projects, mostly about crypto and trading, same as the project today. And Sergey already showed BitOpex. So BitOpex is is a crypto derivatives exchange where you can buy option contracts or sell option contracts. And here we also have a copy trading where we trading for many years, multi-million dollar in the strategies. And of course, we have our trading team, QuantX. So quantitative is like a mathematician who use computer science to automatically trade, and that's the same thing what we're doing. So it's not only me, so I have also some guys in my team. They're all around computer science and math. And yeah, so we constantly looking for new strategies, new opportunities. And then around 1 year Hyperliquid came around. And as we understand a lot about trading and we know there's a long trend that trading should move more to decentralized finance, DeFi, we always looked in everything what is new. And we got very early convinced in Hyperliquid, the project of the Hype token. And we saw, okay, they make the really good product. They doing really good in terms of attracting users, in attracting liquidity. And we early on predicted that it's become very, very big. And yeah, so that's why we decided for Hyperliquid to trade on and started to develop strategies on Hyperliquid, on Hype token. And this especially works well because the hype asset is also performing very well, right? So if you have an asset which performs very well, you can also trade better, right? If you have an asset which is only flat, it's quite difficult to trade. And so that's why we around hype we built a lot of strategies. And so of course, how you're using mathematical models to create strategies, then you test them on real market. And this is what we did on the hype token. And we came up with really, really good results. The results getting better and better. And this is on conservative settings. And in addition to that, we're also holding partly of the assets in hype token and make additional profits on that. So that's just the results, what we create with the trading. But of course, we getting more hype token, we're holding hype token, and we're making also additional profits from buy and hold hype token. Sometimes we sell hype token also, so it's an additional spot strategy. And before I explain how all works, I want to go into the trading first. One second. So you should be able now to see my screen, right? In OKX.
No, no, we still see the slides.
Okay, so always not switching. 1 second, and let me share my screen one more time. Okay, now you should see my OKX screen, right? All right, so this is a account what we trade, and we see like in the last 7 days, we made around 4.78%. So around like a bit more than 0.5% per day, sometimes a bit more, sometimes a bit less. And of course, it's getting a bit diluted because we're adding deposits also from the incoming funds. So if we have a trade running, so the return gets diluted. So actually, the results would be even better. But you can see it's like real trading results and like it's permanent trading, it's going up and down. And of course, if I now going to so I can also go from here to the trading, right? So let me go to the futures. So we're trading an instrument called futures, so that we can have a positive and negative positions. And in theory, we could also take a leverage. And you see, currently we have open a long position of around 1,837 hype. And also a lot of people ask me what leverage we take. So you see, we actually don't have a leverage because 1,000, around 2,000 hype is less than we have like in terms of equity right now, right? So we don't take like a huge leverage in our position. Sometimes you could take a leverage, but we don't trade 10x or 50x. And what you also can see, we're having a lot of trades, right? So if I go back and I showed in other webinars, you see like there's almost every hour there are like trades, right? And it's changed a bit. You see when the market goes down, like you see more like sell trades. And another thing, what is important, you see the green line. So that is the current average buy price of our position. Sometimes we can have a positive position, sometimes we can have a negative position. And you saw we kept buying on the way up of the price. And currently we're around like $1.69 of our average price. And if we continue buy, this actually dilutes our average price. So the average price goes up, right? And we also sell. So the sells are taking profit of our position. So they reduce our position of maybe 1,000 hype and they're taking a profit. But you see, the algo quite well started to accumulate here positions because if we have here the average buy and we of 42 and we kept buying here, this means we already accumulated much more here. And you see, we still have sells. So we also like close profits. And this is what we're permanently doing, right? You saw in the last minutes, we actually had like another sell. So this means like the algo is taking chips off the table. And you will see like if the price goes further down, we probably will change very fast from a positive position to a negative position, right? So we will have not plus 1,837, we have like maybe minus 2,000 or 3,000. It's step by step, but there's not one trade where we buy and then we sell like 3 days later. So there's permanently buys and they're permanently sells, and we fixing the profits in with like a closing part of our profits. We increasing the position when price continues to rise. That's called trend following. And of course, we with that increasing the average price, but also that with that we realizing profits, right? And that's how you could see we have a permanent trades and making with that permanent profit. So the $3,000, what you can see here, it's a bit more than 0.5%, right? It's what we aim to make per day. It was like already a bit like earlier about like 4 or 5,000, but we already today we closed already many trades, right? So we already very good for today, and this is actually what we want to achieve. We want to have like a small trades. We don't want to risk the whole portfolio. We want to have constant trades, and we want to have different strategies which taking advantage of the market in different situations. And how this all works in detail, I will show you now in my presentation. All right, let me just share one more time the screen for case it's not working. So you should be able to see my presentation again. Right. So what kind of trading do we do? So we're doing so-called algo trading. So you maybe heard about algo trading. What is algo trading? So algo is like a mathematical formula which getting executed automatically, right? So it's executed by not by me personally. I'm not sitting in front of computer. I program a small tool, and this tool is executing them all automatically. And we also doing so-called quantitative algorithmic trading. So quantitative means it's all based on math and statistics, stochastics. So we're using data models in order to give our algorithms, which is automated executed trading, the right information, the right methods to trade correctly and to not lose the money. So it's very important because many people who are doing algorithmic trading, they not really do everything based on mathematics, but that's actually the main part what you should do, right? So what is the difference between us and like, let's say the average algo trader? So usually if you come across a trader, he shows you some statistic, he show you some back test and it's look amazing. But how he comes to his strategies is usually he looking into the chart, he doing some back test, and like that, he's handcrafting like one strategy, maybe two, three, four, five. But we already differentiate in this process. Of course, we have ideas for strategies, but we're using also machine learning to constantly generate thousands and thousands of strategies, which went through a process to filter which of these strategies actually work. Then the biggest issue what traders have is the so-called overfitting risk. So overfitting is you trying to find some statistic in the past, right? And from this statistic, you're trying to predict the future, right? So for example, every Monday when there was sun was shining, Bitcoin made or hype token made a 2% plus, right? So you can find such statistics. And when you're doing a lot of backtests, you will find a lot of such data in the past. But it doesn't mean only because the sun is shining that the past data can predict the future. And this is so-called overfitting. A lot of traders, they trying to find data in the past, and then they see, oh, if this happens, always the same will happen in the future. And that's why many traders fail. And here, to eliminate this risk, we're using more advanced mathematical methods. So, for example, we're using, instead of simple backtesting, we're using so-called walk-forward testing. We're using a Monte Carlo simulation in order to check if the parameters we use in our algorithm has some sensitivity. So if we buy when the sun is shining and there's 20 degree, so this Monte Carlo testing is checking, okay, what is happening if we buy also at 19 degree and 21 degree? Because if it's a real pattern in the market, the parameter should have some sensitivity. If you change the parameter a little bit, it should not eliminate all your profits, right? Because otherwise you just found exactly the value where the price moves up, but it's just coincident. It has nothing to do with the market and it's not predicting the future. So very important, we're using here advanced risk. Also, the risk management from a quantitative team is much different than from a algo trading guy. You saw already, we don't take a huge leverage, and that's the question which I get asked a lot. Do we trade 10x, 20x? So actually, we trade like 1x or maybe 0.5x, maybe 2x. So we have a different risk management, and also we using other mathematical formulas, for example, to stop trades, to stop losses, to take profits. For example, we're using an ATR based system. ATR is the average true range. So our algorithm is checking what was the range of the asset we trading in the last 7 days or last 2 days. And based on that, it's setting orders and also stop orders. And with that, we can also reduce the risk. And of course, also very importantly, we we making sure that each trade, even if it's go wrong, because many trades going wrong, cannot lose that much. So we have a clear budget, and the budget depending on the risk, and the risk is also changing depending on the market. Then another very important thing, what most algo trader ignore, is the market regime. So usually, if you come across a trader, he will trade his strategy no matter what the market is. Is it a bull market? Is it a bear market? Is it Monday? Is it Friday? Is the market volatile? Is it not volatile? They just have one statistic and they're trying to apply the statistic on each market, on every market. But we using AI here to detect what kind of market regime we have, or market regime is another word for market phase. Is it an uptrend? Is it a downtrend? Is it a volatile market? Is it news driven? And based on that, we change also the algos which we use and also how the algos work. Execution, very important. Our algos are completely automated. They're running 24/7. You saw on my trading streets, they're all the time trades. It can happen in the night, during the day, in the morning, in the evening, right? And also the system is self-monitoring. It's detecting if something working not right, and it's also adjusting based on the real market data, the algos. And of course, the indicator. So we not only use like simple indicators, what everyone is using, like RSI or MACD, we also using complex models like LLMs, optimated for price data, or like other complex indicators to predict market regimes and market entry points and exit points. Right. So I wanna show you one more time our process. How do we create these strategies? So again, I told you we're using machine learning. So machine learning is basically what you call AI. So there's a thin border between machine learning and AI. So mostly what is like ChatGPT doing, it's also a machine which is learning and trying to predict the answer you want to have in the future. So we're having strategies from the past, we're creating new strategies, and then we're giving it to our machine learning engine. And this machine learning engine is then trying the strategies with different indicators in different time frames, in different phases of the market, combining it with other data, and generating thousands and 10,000s of strategies. So manually, we couldn't do that, but that's actually the process of what a trader need to do. It need to research the market, test different indicators, and so on. After we have this 10,000 plus strategies, we need to make sure that we not have overfitting risk. We need to make sure that these strategies actually work. So we're running them through a Monte Carlo stress test to make sure that there's no data sensitivity, that they're statistically correct, that we can, with that, predict the future. From that, so that process will kick out 80% of the strategies, because 80% of the strategies which will look good on paper will in reality not work. Then we're running them through a walk forward test. So in a walk forward test, we're taking a sample from our algo, let it run, take another sample, let it run. So we make an iterative back test. And based on this iterative backtest, we're getting more reliable results. So we're not optimizing like an algo on all historic data all the time. We're taking small samples and test them again to make sure that we not have overfitting risk, to make sure that this will also work on data it does know. So also we're using historic data, but we're using the historic data without the algo know the outcome of the historic data. So if you're creating a strategy and you then using all this data, and then you let it run on this data, of course, you will have a positive result. So we're using only part of the historic data to test it, and then we let it run on the same historic data without involving this future historic data. It sounds a bit complicated to optimize it mathematically. And then after that, it's not done. Then we're running that on live data. So we're having also like other test accounts where we're running constantly 50, 100 strategies. They're running on a small amount all the time, maybe for half a year, for several months. And then we observe if the strategy has the same result than we expect, if something changed, and so on. And after that, we're having an active portfolio, what I just showed you. And this is the result what we have currently on our OKX account. So we're running on OKX 11 strategies. These strategies are built and trained on 4 different time frames. So they have different time horizons. We're using different signal types. Also, we're combining that with AI, and they're 24/7 automated. And maybe I use this opportunity to go one more time back to the account, because now you will understand better what we're doing here, right? 1 second. So you should, right. So you see, if you would use one strategy, right, it wouldn't necessarily not make sense that it's buying and selling and still is like in one position long. It would like build up one position, close this position. But we having like an average position and with an average price, and this average price will also change based on the position, and slowly it will change. And you see, we're using different strategies. So you see, we started to buy up here positions when market started to go up. These strategies are called trend following. So there's a market trend, and we're trying to catch this trend. If the price goes down, so let's find like here, you see, like it's starting to sell, but let's find here's a longer down phase. So it's trying to build up a negative position. But also in between, you see buy and sell. So there are also different strategies which are not focused on the trend. It's trying more to find like swing trades. So let's maybe find. I think here it's more like trend, but here you see here you're doing more like a swing trades, and also in our current market phase where we are, you see like today we had like a lot of buys and sells, right? So these are kind of different strategies. It's like swing trades. And the idea of what we're having with a variety of strategies is that we're not trying to find the holy grail of one strategy which works on every market. We're trying to have strategies for every situation, and we're trying to have strategies which also balance out each other, right? So that's also part of the risk management. If we have only trend following strategies and the price doesn't go nowhere, only sideways, we cannot make any profits. So we need to have for this situation also different strategies. So when the trend following strategies do not work, we have other strategies which starting to work here, and we're making from them profits. And with that, we're getting a diversified portfolio. Same if you would build your own portfolio of assets, you would not only put Bitcoin in there and like some ETF, like or only one ETF, you would try to have a diversified portfolio that if Bitcoin doesn't work, that the ETF will work, or the other way around. And the same thing is what we're doing with trading. We're trying to diversify our strategies. We're trying to diversify our portfolio in order to be prepared for every market phase. And we don't want to make one huge profit if the price goes up. We want to make constant permanent profits, as described on our platform. Around 0.5% per day is our goal. I told about AI, and I want to be also transparent here. So we're using our own machine learning tools and other tools which we build ourselves, but we also using known technology such as the Chronos. Chronos is a large language model such as ChatGPT, but unlike a ChatGPT, which was trained on language, it was trained on price data. So Chronos got trained on the price data of all assets of 45 exchanges. So from OKX to Binance, from crypto to stock exchange. And it has like 500 million of parameters. And we used Kronos as a foundation, and then we started to train Kronos also in additional data from Hyperliquid, from the Hype token, and also on our own strategies and our strategy results and our trading results. And now with that, we could then use Kronos to help us to decide which strategy should we trade in which moment of time. So what is the best condition for a trend following strategy or for a swing trade strategy, and with which risk should we trade. So Kronos can say, okay, now we should have a bigger position because now the risk is lower of like a negative trade, or now is a smaller position because the risk is lower. So we're using not Kronos to make the trade decision, but we're using Kronos to help us in certain conditions to have a better probability, a better risk management, making more returns, and so on. One important point in our trading is also our accumulation engine and our accumulation strategy. So we not only trading Hype token, but we also holding Hype token. So we're not putting all assets only in Hype token, but we're trying to accumulate Hype token when the price goes up. And of course, we will also fix profits that we not depend on a market crash. But importantly, we also holding all the time some part of the portfolio in a Hype token. And that can be more and can be less. And against this Hype token, we can borrow. So when we do a trade, it takes a loan against the Hype token, right? And the US dollar. And if we're making a loss, it stays as a loan. So it will not reduce our amount of Hype token. It will be just a loan. And with the next trade, when it will be profit, it can then repay the loan. So with that, when we're in a phase where we're trying to accumulate Hype token, we even on negative trades, we will not lose Hype token. We're just getting a loan, and like that, we never reduce the amount of Hype token in a phase where we want to accumulate Hype token. And last but not least, I mentioned risk management, what we're doing here differently. And I think it's always important to talk about risk management. And this is also the last slide. Then we go back to Sergey. So please stay with me because risk management is very important because everyone want to have profits, but you also want to, we don't lose the money. So first pillar of our risk management is using also floating balance in our drawdown statistics and also in our optimization of our strategies. So why this doesn't sound so special, but actually it is. So usually when people doing a back test, so they're using historic data to show that the strategy works, they only show the statistic of closed trades, right? So, but you also need to see what happens during a trade. Do I have a loss during this trade? And is the position loss compared to my portfolio higher than of the closed trades? Because otherwise you can have statistics of, okay, maximum loss of 5% or 10%, right? But in actually during the trades, it was 50%, and you ignore the statistic completely. Then, as I said, we have a cross strategy. We're looking into cross strategy correlation. So we're not running only one strategy. We're running a diversified portfolio of currently 11 strategies. It can be more, it can be less. But we're also looking that the strategies are not correlated to each other. So we want strategies in the portfolio which working when the other strategy doesn't work. Then we're using, as already mentioned, dynamic ATR-based stop losses. So when we do a stop loss, the stop loss is set based on the volatility of the asset in the last days, hours, depending on the strategy. And with that, we can also move the stop loss behind the position. So if the price moves up, we can move the stop, which at one point not becomes a stop loss, it's just closing the position. But based on the volatility, we're moving it behind that. So, and it's of course very important in terms of risk management to taking in consideration what is the current volatility. Because also based on the stop loss, we increase or decrease position size, right? With a higher position size, we have a closer stop loss, and with a lower position size, we have a stop loss more far. And so we're using here like an ATR formula. It's like state of the art, what you use in quantitative trading. Then again, we're using regime awareness, we're using AI to detect which strategy should be traded when, and what is the risk. And so this is already a big change in risk management, because we don't do the same thing all the time. We're doing different risk management. We're doing different risk per trade on different markets, based on different factor, and based on, with the help of AI. Then we have a daily monitoring of the equity curve of each strategy, of the profit and loss of each strategy, and we compare that with our mathematical model, with our historic data. And if something doesn't work, one of the 11 strategies will be deactivated. So we have basically like an auto deactivation. So if a strategy in the past lost maximum like 0.5% per day, and today it's above 0.5%, then the strategy gets stopped to avoid further losses. And last point is portfolio risk budgeting. So each trade, each day, each week has a budget, right? So this means if a trade goes wrong, we're not losing 1% of the portfolio, we're not losing 5%, we're losing maximum 0.1, 0.2%. And so this means every trade has a budget. So even if like a lot of trades go wrong, and if you have very, very bad day and a very bad week and a very bad month, we have no risk to lose the whole portfolio. We're losing only small portions. And in combination with our daily monitoring, the trading is adjusting itself. And we basically have like a very safe risk management with that. All right, that's so much for me. I hope you enjoyed that. I could show you the trading. I could show you the profits we really made with real accounts and real trades. And I think now it's time to Sergey introducing the new updates.
Yeah, thank you very much. It was, of course, more detailed, but I think it's very important for you that you understand how everything works. And now I want just quickly, only 3 minutes, that I will give you some leaks. Yeah, so I already gave you the updates and also what will come next. So let me quickly share my screen. So yeah, so you see here, there will be soon, I think next week, there will be launched a trading terminal where you see all the results as an overview, also the monthly results. Also, there will be more updates by the CEO, and also we will launch an education center where we will educate you also about Hyperliquid, so that you understand even what is Hyperliquid, how everything works, so that you just understand more about what it is. Also, there will be more a webinar library and also more materials for you as an affiliate. Yeah. And also, what we are working on is to how, especially for the affiliates, how you can even earn more money here. There will be launched some new stuff, some new products that we will introduce to you here. And yeah, so yeah, but it takes a bit time. But yeah, we are already taking all the feedback. Yeah, because we are right now still in the, let's say, in the pre-launch phase. Yeah, and taking all the feedback from the communities and optimizing everything, what you need and what we of course can do. Yeah. So yeah, thank you very much. And yeah, 45 minutes was good. So we will upload the recording. And yeah, thank you very much. And see you soon in the, yeah, in the next webinar. Yeah, so please join the Telegram group. And also from this and next week, there will be a lot of webinars in different languages. So I know there were already Russian language webinars. We have already a Russian language Telegram channel. There are also will be coming soon Latin America, so Spanish webinar, Asian webinars. So just join the official Telegram group, and we will announce there all the other languages and all the other channels in different languages. So thank you very much and see you soon. Bye bye.